Good afternoon and welcome to the LPA Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time just by using the Q&A tab that's situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to CEO Philo Daniel Tran. Good afternoon.
Good afternoon, everybody. Thank you for joining. Philo Daniel. I joined LPA as a CEO at the beginning of this year, and I'm delighted to be here. Prior to joining LPA, I worked for Smiths Group in a global capacity, and I ran their aviation and urban security division. Prior to Smiths, I worked for Thales Group for a decade and a half in various geographies around the world. And I've worked across all of the segments that LPA currently operate in. And on that note, I'll hand over to Stuart.
Hi, good afternoon, everyone. So Stuart Stanyard, I'm the CFO. I joined LPA a couple of years ago. Previously spent just over 20 years working for Rolls-Royce and Civil Aerospace, and most recently working in a PE-backed company that was sold in 2022.
Okay, so why am I here at LPA? When I first saw LPA, I said, I think this company could be so much more, so much bigger. And I wanted to take LPA on that journey, and I wanted to be part of that growth story. So here I am. And the agenda today, I'll start off with what a well-invested company LPA is. I'll go into the diverse capabilities of the company, how we play in the marketplace, and how we attract our customer base. And then Stuart's going to take us through the FY24 results, and I will finish off with my strategic priorities for the future, what my vision is, and how we can achieve profitable growth in the medium term. Okay, so LPA. So for those who don't know LPA, LPA boasts an impressive legacy of 150 years as a premium design and manufacturing company. What we have done really well, time and time again, is we've reinvented ourselves. So we take our products, we improve it, and we deliver. We buy and acquire new products, and we do the same. So we acquire it, we design, we deliver, and we make it a success. Our commitment to quality and innovation has positioned us as a trusted partner and as a leading manufacturer in the marketplace. So if that has allowed us to then go into the next slide, which talks about our market segments that we're in. So we're quite well known in the rail industry, but what we've done is our quality products and that we have delivered, once we've actually captured a market segment, we have looked at market adjacencies. We have then identified new markets, how we can improve the products, and then take it and deliver it within those markets, which has then allowed us to diversify into aviation, aerospace, and defense, and other infrastructure projects as well. So customer centricity is absolutely key. We understand the customer's needs, we understand the market demands, and then we develop our product innovation based on that, which has then allowed us, if I go to the next slide, to become a respected market player globally. We boast a remarkable market presence. If you look at this is quite an impressive slide. When I first saw that, for a small manufacturing company based in the UK, I was really surprised with the breadth of the world that we actually, our global reach. It's a diverse market segment range that I've just shown you in the previous slide. Which brings me to my next slide, which actually talks about the customers. And what an amazing list of customers. We punch well above our weight. When I first saw this list, I was really, it kind of brought a smile to my face because I said, oh, wow, there's Downer there. I worked with Downer when I was with Thales in Australia in 2010 on their train communications project. And of course, Transport for London. I worked on the first deep tube project bid when I was head of strategy for Thales Transportation in the UK in 2016. And not last week, actually, a couple of weeks ago, there was a really great story on LinkedIn by Siemens Mobility that spoke about the Deep Tube project and the collaboration with LPA. We are providing the entire lighting systems and electronics within the Deep Tube train that's being manufactured in the north out of our Normanton site. So that's really exciting. Of course, Hitachi there acquired Thales Transportation globally last year, and I know that part of the organization really well, Kinki Sharia as well, in my roles within transport in different parts of the world. If I come a little bit more to the right of that slide, you've got the aviation customers. In my time with Smiths Detection, I worked with the global team with a lot of the top leading airports, and then there's Lockheed Martin there and Airbus as well in terms of my time with Thales in the defense side, or Airbus in terms of the avionics side as well out of Singapore. So why am I saying all of this? For me, this is a really exciting top tier list of customers, and it gets me super excited because I know these players in the marketplace, and it allows me to re-engage with them and to deliver to them. And I'm really super pleased that LPA are operating in this space. And we have an impressive list of customers because we have an impressive product range and product delivery capability. So yeah, this is really nice for me to be able to work in this space again. So if I now touch a little bit on our capability as an organization, we pride ourselves in LPA for our excellence in engineering, in design, and in manufacturing. We have 3 really well-established and well-invested facilities and manufacturing sites around the UK. And each of these sites specialize in different capabilities. All our properties are freehold. Stuart, did you want to cover on the freehold topic?
Sure. So the three sites have been recently valued when we refinanced our bank facilities just over a year ago at 5.1 million. In the books, which I'll show you later, they're actually at a net book value of 3.7. Okay,
great. So we know how to leverage our IP and our know-how, and we are really able to establish our install base. As I've mentioned, we improve our acquired products, we enhance the existing product range that we have, and that's how we maintain our incumbency with our customer base. So I'll get a little bit more into each of the capabilities of each of these parts of the organization. Just before I start, for those of you who are familiar with LPA, you would know them as divisions, previously known as, I'm calling it LPA electromechanical based on the capability. It was previously called connection systems. I'm moving more towards a one LPA vision, and I'll touch on that a little bit more towards my last slide, which is looking forward. But I'll go a little bit more into Saffron Walden. So Saffron Walden is about an hour away from London. It's 140,000 square feet of agile manufacturing capability. By that, I mean that the factory can be reorganized. It's got cells and we can make different subsystems within the same cells, and it can be reconfigured quite quickly to meet either building an aviation product or a rail connector or an aviation connector. It's an impressive vertically integrated site. So if you walk into the factory, you find copper and brass that gets manufactured into connectors, which then gets assembled into cable harnesses and wiring looms, which then gets assembled into our various subsystems that we deliver to our end customer. So if you look at the slide that you've got there, you've got our aviation connector there that's connected for ground power. You've got the red box, which is for kickstarting a smaller plane. You've got industrial applications of connectors to the bottom right, and the top right is the jumper cables and the connector boxes under the car of a railway. So these are all really nice subsystems that we make out of our Saffron Walden site. If I go to the next slide, previously known as LPA lighting, and we are so much more than a lighting and seat electronics business. So I think really appreciating the electronics capability within this facility is quite key. And for me, it's a very exciting offering that we can deliver out of this site. What we do is we're able to develop the different electronics within the compartment of a train. So interconnecting all those electronics into a central control unit that can be controlled with a graphical user interface, either within the cabin, at the seat of the car, railway car, or at another centralized location. They're all the possibilities. And this modernization of the railways and modernization of the train carriages, we're part of that story and we're part of that journey with the customer. And I'm super excited because the digital capability that we've started with the embedded software is something that we can drive further, and we can do so much more beyond the current train carriage electronics that we do. We, of course, also do deliver to other infrastructure like the hazardous environments, like the Hubble that you can see to the right there as well on the picture. The very last one is LPA Value Add Distribution, previously called LPA Channel Electric. This is a 60-year-old business, and we are not just a distributor. We are a value add distributor. By that, what I mean is we understand the customer's pain points and the customer's needs of what they need within that space we work in. We understand the supplier's products. And together with our electronics capability in Normanton and our machining and electromechanical capability out of Saffron Walden, we are able to come up with a subsystem that we then deliver to the customers. And we have added more partners because the customers love us and the partners love us. And because it's something that we are able to drive. It's really something that, because we're small, we're agile, we're able to really respond quickly to both sides and both their needs. Last year, we were the Supplier of the Year award. We got the Supplier of the Year award from Amphenol, which was one of our first suppliers, and we are their second largest distributor. There are some fabulous new projects, such as the Hill helicopter that you can see here. What we do here is we have got our design embedded into this prototype. So if this takes off and that is the design that is finalized, we will be part of that design and sales for the next 5-10 years for the duration of that particular design of the helicopter being sold. There are so many further adjacencies. We have immense growth opportunities in this area. This is a super exciting field to be in, because it really takes me back to my systems integration days my background in systems engineering as well. So it's an exciting proposition here. Right, so let me just touch a little bit more on the operating highlights. So you've seen a few announcements recently. If you're familiar with LPA, we had an RNS last week or the week before, which spoke about our 1.3 million win. This is for Crossrail project. It's for new builds. The beauty here is that we're already part of that design. And if there's future builds, not only will it be this 1.3, there will be further win and orders to benefit from as well. Last year in December, you saw the RNS, which was about 4 million, which is a great win for us because it's quite a big, a couple of contracts together there. These large wins are really great because it secures our order book. And I like the big projects, and Stuart's going to talk a little bit more about how the forecast is in terms of the order. But we are looking to diversify. We are looking to get more product sales in as well, which will then allow us to balance that order book. And we will continue to do that. And you'll see a little bit more of how we're doing that within the diversification away from large rail projects and looking at more value add business work as well. If I touch on Redbox, so in terms of acquisitions, we acquired Redbox a year ago. That business has been fully integrated into our operational site in Saffron Walden. If you walk in now, you'll see a sea of red boxes there ready to be shipped out to our customer base. Here we are already, we acquired, we improved, and we've delivered. We're continuing in parallel to come up with the next generation of products, and we're also consolidating the product portfolio. We're now really re-energizing the sales force to go out there and market the product. We're also reassessing our distribution that we acquired via Redbox and looking to see whether they can sell more of our aviation connectors, as well as, are they really a good extension of our sales force, and leveraging that a little bit more. In terms of Martech, you would have seen the RNS that came out in January about our recent acquisition, which is very close to being finalized. So Martech is really exciting because they make power supply, and with the power supply, the electronics within the power supply, at the moment, it gets made out of Poland, but we will insource it. Our Normanton site will make the electronics for that power supply. In terms of the power supply itself, it can be used within the Redbox, and that can also be insourced. So you can see that there's already lots of synergies, and we can leverage our own existing business to make that a success. And we will do, just like we've made Redbox or the previous acquisition with the jumper cables. If I just touch quickly on the certifications, you can see a big long list of certifications here. And this is an envious list for me because it gives us a right to play with our top tier customers. And our customers operate in safety and mission critical environments, which is really exciting and in terms of aerospace, we've just got the aerospace quality standard for 9100, which then allows us to do more in that value add distribution space, such as what I've shared with in the previous slide with the helicopters and the aerospace side there. In terms of the DAC market, which is the German-speaking market, a year ago we employed a business development manager. He's fully embedded now. He's driving that part of the business really well. He is making really good progress with customers and opportunities within the German-speaking market, so much so that now he's expanding into Eastern Europe. He's got some good customers and good opportunities in Poland, which he's pursuing. And so that's really exciting, and it gives us an opportunity to do more in outside the UK and sort of build on that distribution network, build on our ability to go further into the international market as well. The last part is really pivotal to our transformation journey, and I think it's only right for Stuart to actually touch on that.
So last year we were quite ambitious. We implemented a new ERP system on both of our main sites. Both sites previously had different systems. One was coming to end of life, and the other was almost there. So this we believe will massively help our transformation, and it will give one source of truth. It will enable collaboration between the two sites and the offload and the interaction that Fido was just talking about there. So we're really pleased this was successful. As, notoriously these are long on cost and long on time. So this came in on time and was fully implemented at the start of this financial year.
Thanks, Stuart. So if I think we can go to the next slide. Okay, great. So in terms of sales growth, I think my focus initially is we really need to deliver on our current orders. I'd like the team to secure the next, secure what's in the pipeline. We've made 3 acquisitions in under 2 years after a 20-year break. So I would really like to make sure that we've fully embedded Martech as well, similar to what we've done with Redbox. And I really want to drive growth and maximize the sales out of these new acquisitions that we've made. Once I do that, then it would be about taking stock and then understanding what the next strategic list of potential opportunities is for growth, and that will allow me to double the size of the company in my first 3 years within LPA. So that's the ambition at the moment. And I'll just leave you with, just to re-highlight, that we are a well-invested company with assets and capabilities worth more than double the market cap. We have certifications that allow us to access our high-tier customers globally in safety and mission-critical environments. We develop and deliver world-class products which are highly reliable, and we have a strong order book with repeat business. And I think at the moment I'll hand over to Stuart so that he can take us through the FY24 numbers, and then I'll come back to talk about the future.
Thank you, Fila. So firstly, I'll concentrate on the income statement. And key first thing to notice that the underlying results were in line with market expectations. That we have a solid order book, we've got solid order entry, and we had an 8% revenue growth during the year. Looking down the income statement a little bit further, you'll see that the gap between underlying operating loss and loss before tax this year was because of some exceptional costs to do with acquisitions and reorganisation. And in FY23, the 0.9 gain was a result of the first acquisition of the negative goodwill there. You notice our net debt is up slightly. That's a result of investing in the business, and we've refinanced our bank facilities during the year. The operating loss is flat across the 2 years as we're continuing to invest in the business for future growth. Moving on to the balance sheet. I touched on the freehold property previously. So market value just over a year ago at 5.1. They are in the tangible assets there at 3.7. The growth in the intangible assets during the year was a result of the Redbox acquisition and the ERP system that I briefly touched on. The pension asset is a very interesting one, and that is a defined benefit scheme, and that's a surplus net of 25% tax. And this would, under current legislation, come back to the company if the scheme was to close now. Logistically, there's about 110 people in the scheme. It was closed 20 years ago. The assets are matched to the liabilities. This is not something that we intend to hold longer term, but currently it helps the balance sheet. We see there's minimum downside and potential upside gain there. You'll notice the net working capital was down slightly during the year as we managed cash very well. The gross debt in turn includes bank loans and leases, and the gearing at 13.1%, slightly up from last year at 7%, but remains pretty low. Moving to the cash flow, there's a net cash outflow of 0.5 million for the full financial year, which is lower than last year's 1 million. The key aspects here are the investing activities, which would be the Redbox acquisition, the second half of the first acquisition we made, and the ERP system, basically offset by the improvement in working capital. Financing activities are slightly less because we had the incremental bank loan during the year. The exceptional item towards the top in FY23 was again the negative goodwill from last year. We intend to have a progressive dividend policy in due course when we get the business growth, but currently our main focus is to reinvest the cash into the business. Moving on to a little bit more detail on the order book. You can see a strong order book there of 25 million. You can see it's split by segment, and you can see it's split by delivery. A little bit more detail on this. Of the order book, 90% is rail currently, and about 10% of that is aftermarket. Looking at the delivery profile, you'll see that 34% of that moved into FY25, slightly up from the previous year of 32. Moving on to revenue, 3 little bits to pull out here. You can see that rail at 69% remains the largest portion of our revenue, albeit that's down from 75% last year. The revenue is split about 2/3 project and 1/3 aftermarket. Looking at the next line there is the change in, I think, the change in strategy coming through over the last 2 or 3 years. The aviation, aerospace and defence has moved from 13% in FY22 to 20% FY23 and now 25% in FY24. Looking at the revenue by segment, the main change in the year is that the value distribution got back to pre-COVID levels and was a main change during the year. On the right-hand side of the chart, you can see that our exports now constitute 41% of revenue. That again has been nudging up the last few years from 35% in FY22 to 39% last year and then to 41% for the current results. I'll move back to Philo for the last couple of charts.
Thanks, Stuart. If you just pause there for a second, if you just go back to, sorry. I just wanted to pick on this picture here. So this is our crocodile cable carrier solution, which we provide to airports. And what this does is it provides ground power to the plane. So this is a picture of the new next generation, essentially, and it's taken from Heathrow. It's connected to an Air Canada plane. So Heathrow have had this, the predecessor of this product for over 15 years, and they really like it because what it does is it stops the cables getting worn out by being dragged on the tarmac, and this allows you to take the power from the terminal through to the airport, to the plane, sorry, within the airport. And so they were really keen to get to get some, to buy some new ones. And what we've done is we've worked with the customer in this case and understood their pain points and they love it, but there's some little tweaks that we could still make with the product. And this is really about listening to the customer's needs and developing the next generation of product to actually, be a win for both sides. So this has been in trial in Heathrow since December. The customers love it already, and the trials usually go on for a year, but we're hoping to get some orders much sooner. And we'll speak to customers in other parts of the world very soon about it as well. So yeah, it's just a nice little story. So I just wanted to touch on that before I go to my final slide. Right, so one LPA. So when I started with LPA, I said to the board, I want to lead LPA with purpose to succeed. And I want to do that and to drive accelerated growth. I feel I can do that via my one LPA vision with a one team. So I've done away with the divisions and we've reorganized relatively quickly because we've got our existing executive team that will lead the various functions. So modernization is we have to adopt and adapt for growth. And part of that is via the transformation that we've already started, that LPA embarked on last year, where, and Stuart spoke about the ERP system that is well embedded now. We're using a CRM tool collectively across the organization as well. So what will this do? The one LPA team will give us operational efficiencies, improved collaboration, it promotes innovation, and we can deliver excellence in delivery as well. And so customer-centric new product innovation and new product rationalization is quite key for me. And I've done this before. I've done this with Smiths before in terms of the aviation division, where we reorganized and we drove rationalization and delivery of new products to drive unprecedented growth in the last couple of years before I left. Our factories and sites have plenty of capacity for us to grow and achieve our strategic vision. So I feel we're setting ourselves up correctly for the potential growth that we're more than capable of delivering. And I think it's a great opportunity, and I'd love to have some new investors come on board and come on this journey with us. I think it's super exciting, and I'm very excited to be here with LPA. So I think over to Alessandro.
Philo, Stuart, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right corner of your screen. Just while the company take a few moments to read the questions that have been submitted today, I'd like to remind you that recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Philo, Stuart, as you can see, we have received a number of questions throughout today's presentation. If I could hand over to you to read out those questions and give responses where it is appropriate to do so, I'll pick up from you both at the end.
Yeah.
Do you want me to try and answer the first one?
Yeah.
So we've got a question. How is LPA diversifying its revenue streams to reduce reliance on large rail infrastructure projects? Excellent question. I think we touched on it during the slides there. We have moved the aviation, aerospace and defence significantly from 13% to 25% of total revenue over the last 2 or 3 years. The acquisition of Redbox Aviation helps that. It is not a strategy away from large rail infrastructure projects. Those are excellent projects to have. Just that we need other things to supplement those as well. Hopefully that covers that question.
Thanks, Stuart. I'll take the next one. It says, what are your immediate priorities and how do you plan to accelerate growth and profitability? So I've touched a little bit on the One LPA vision. So I think operational savings in terms of there's so much more growth that we can deliver if we work better internally within our organization. So there's operational savings to be gained by the teams working cross-functionally together. So that is my immediate focus. And in parallel, I want the team to deliver and hit the current year's numbers as well that we have committed to with the city. So yeah, that's essentially it. It's just really about re-energizing and driving that growth. I can touch on the next one as well. I'll just read the next question out. With a focus on engineering-led solutions, what are the key R&D investments currently being made? So our primary focus is really, the first part is we've got existing products, and then we look to innovating and coming up with the next generation of whether that is our connectors or whether it's our electronics capability. For me, it's really about, so we've got the right certifications to work with a large range of market segments. I would like to see us focus a little bit more on our electronics business in terms of our software capabilities. There's some great ideas there. We're coming up with a pipeline of new innovation topics that the technical team are presenting. So we will look at that collectively and then work on additional areas of which electromechanical systems and which electronic and software systems we will focus on, as well as systems integration capability with the value add distribution as well. So yeah, some interesting opportunities there.
Shall I take the next one? I'll take the next one. So the question, what is your acquisition strategy? So I think we've discussed that we've made 3 acquisitions in the last 18 months. We need to make sure that we fully embed those and get the value from those. That doesn't mean to say that we're not looking at anything else or won't look at anything else. We'll look at things on an opportune basis where there's innovation, there'll be growth, where they're complementary, as Philo mentioned with the recent acquisition of the Martech. We're going to insource some work, and the acquisition will also feed some work there. So we're very keen to develop a proven track record of integrating acquisitions that will help us going forward. So I guess we're open. They may be larger, they may be joint ventures. Who knows where they'll go? But we'll certainly be looking into again in due course.
Stuart, do you want to take the next one as well?
I'll take the next one as well. So with no proposed dividend, what are your priorities for reinvesting cash? And when do you anticipate the company will bring back a dividend? So I touched on that briefly, I think, in that we will look to introduce a progressive dividend again in due course once the growth allows us to do that. But certainly in the intervening period, we're looking to reinvest the cash in the business like we did last year on the new ERP system and the acquisitions. So it will be in due course, but our priority at the moment is for investing it back in future growth.
Okay, I'll take the next one. It says, how do you see your customer and sector sales mix changing in the coming years? So I think Stuart presented the slide which demonstrated that, you know, we have we want to remove the reliance on rail, but it doesn't mean that we want to get away from rail. So for me, it's really good to have those large sales, as I said, get the large contracts, which gives us that forward vision. With trying to increase more product sales rather than programs, it will give us more recurring revenue and that rebalancing. And that could be, it's a combination of rail and non-rail segments as well, aviation and aerospace and defense. So you can see that we're starting to diversify based on the numbers that Stuart's already shared. And we will continue to do that in the coming years as well. So there's definitely a refocus on the non-rail segments, but with the anticipation for growth with a much more diversified portfolio of sales.
Let me take the next one for you. So good question here. So what are the projected numbers for this year and next? So the numbers that we're projecting for FY25 are revenue of 25.9 and an underlying profit before tax of 0.3. And then for FY26, we've got a revenue of 28.5 and an underlying profit of 0.5.
And the next question on do you see opportunities in any new geographical markets? I think there's, obviously we've got a global spread in terms of our install base. I think there's some really good opportunities of growth in places like in the Middle East, in wider Europe, the US as well, and in Asia. So there's quite a lot of different opportunities. I mean, in terms of where those new projects for rail projects are, but that's also for things like red box sales. So I wouldn't say that we're going to focus only on one. Depending on the product type and the portfolio, we will identify which area we will target a little bit more.
Okay. I think we're about done that,
yeah.
Perfect. Philo, Stuart, thank you very much for answering those questions from investors. Of course, the company can review all the questions submitted today, and we will publish the responses out on the Investor Meet Company platform.
Mm-hmm.
Just before redirecting investors to provide you with their feedback, which is particularly important to you both, Philo, could I just ask you for a few closing comments?
Yeah, sure. So for me, I've come in, obviously I've been with the company for 7 to 8 weeks now, fresh eyes. There's great capability. I am so excited about what the future holds, and I'm it's looking promising in terms of what we have and what we can do with our existing install base and with our customers. I'm super excited and really looking forward to what the future holds.
Philo, Stuart, I'd like to thank you once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, so I'm sure will be greatly valued by the company. On behalf of the management team of LPA Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.